Subscribe to our YouTube channel and press the bell icon to get the latest updates.
Hello viewers, welcome to the Fast Profits Daily. Myself Brijesh Bhatia. Well, if you look at the dollar index, it's been talk of the town as it has approached back to the 96 levels. Let's understand what is dollar index. So basically, dollar index is used to measure the value of dollar against the six currencies, which is euro, Swiss franc, Japanese yen, Canadian dollar, British pound, and Swedish krona. The index started in 1973 with a base value of 100, and since then, if you look at it was established shortly after the Bretton Woods Agreement was dissolved, and since then, the value of dollar is being tracked with the term called dollar index. So let's look at the components and weightage. As I said, it comprises of six currencies over here. So going by the weightages over here, euro has the largest weightage, which is around 57.6%, followed by Japanese yen, which is around 13.6, Great Britain pound, which is around 11.9, Canadian dollar around 9%, Swedish krona around 4%, and Swiss franc, which is around 3.5%. So if you look at the momentum or the analysis, let's look at one by one, comparing with if you look at the first three, which comprises somewhere around 72% of the dollar index. So let's look at the first, which is euro USD, which is around 57.6% weightage. And if you look at the chart over here, the red curve line, which is around 200 as exponential moving average, and if you look at, we have formed around double top, the similar structure when it tested around 1.24 1.25 levels, consolidated for quite long, and now we are witnessing a fresh breakdown into the euro USD. So what does this mean? That when the euro USD prices go down, it means that euro is depreciating or getting weaker against the dollar. So more it falls, the dollar gets stronger and euro get weaker. So if you look at the momentum, we believe that it has gone below the 200 weekly exponential. And if you look at the lower panel, which is the RSI, the blue line, again RSI basically measures the strength of the momentum. Now if you look at the black line, it was holding for around 3940 levels on RSI for quite long, and now we are witnessing a breakdown, which is again a bearish range shift on RSI, indicating that the euro will get more weaker and dollar will get more stronger. Look at the second, which is USD yen. Now basically USD yen, and if you look at the euro, the base currency there was a dollar. Now the base currency here is yen. So in this chart, which is opposite to euro USD, it means that when the euro USD yen prices go higher, dollar gets stronger and yen gets weaker over here. So now if you look at, after a long time, it has tested around 116 and a half levels after long years. But still, if you look at, it's been consolidating in a range. Now the good part for dollar over here is it's again on a weekly scale, trading about 200 weekly scale. Now if you look at the lower panel, it went on the RSI, went above the previous resistance line, but it is now trading around the same level. Any move above 116 and a half, 117, we believe that the yen can go up to, the dollar yen can go up to 120, 21 again, which is a very negative sign for yen and slightly other Asian indices, because the yen is widely tracked into the Asian indices. Now if I just look at the third, which is pound to USD, GBP, Great Britain pound to USD, which comprises around 12% weightage onto the dollar index. And now if you look at the momentum over here, on similar lines, trending around 200 weekly exponential moving average, trending in a range similar to the yen what we saw. It's been slightly resisting, but if you look at the pound as well, it's been resisting around the similar lines of 200 weekly, trending into a horizontal channel. Any move now over here, it is, though it has a weightage of around 12%, and yen, if you look at weightage of around 13 and a half, if I comprise both, which is somewhere around 24-25%, which is still holding at a good support zone. But if you look at where we have seen the euro momentum, it's been indicating that it's been getting weak against the dollar, which comprises of around 57.6 to around 58% mark now. So here the dollar index, now if you look at the dollar index, it's the momentum is very negative for euro. So the fresh breakout we have seen on the charts as of now, which is around the multiple resistance zone of around 94-95 mark, heading towards 96 as of now. And if you look at the structure, the double bottom structure has been visible, plus the bullish range shift again on RSI, which indicates that dollar index is heading for 100. Now the weekly scale consolidation is very huge over here onto the double bottom mark. We have seen 94-95 been resisting. Now the momentum is clearly into the dollar index bulls, which means that the dollar index is about to strengthen. The only over here we think that the more weakened currency or the forex would be the euro USD, again the major components of the dollar index. So which again, as I said, it comprises of around 57%, and anything getting weaker over here, the more the euro weakens, dollar index getting stronger and stronger. And again, as I said, it's benchmark, which is benchmark index, forex index, which is tracked globally. And again, it might put pressure on other currencies as well. If dollar index continues to strengthen towards 100, it will definitely put pressure on other currencies as well across the world. So I believe dollar index is heading towards 90 and 100 levels into the coming weeks, and the euro would be the one trigger which will take dollar index towards the 100. We added one chart over here, which is the USD INR, Indian Rupee, though it is not part of dollar index, but sharing our view. If you remember a few months back, I have done a video on USDINR that it is heading towards 80, and I still hold my view. Though for a longer months of time, we are consolidating between 70 to 75 range for quite long. But if you look at the last week's momentum, last couple of weeks momentum, we have seen a strong depreciation of rupee against the dollar. And if you look at the chart over here, as I said, weekly 200 red line, which is in favor of dollar over here. And if you look at the momentum, any momentum over 75, half 76, it could trigger a fast and furious move towards 77, 78 levels, and eventually we might head towards 80 levels. And I still hold my view of 80 on to the USD INR. As I said, as if dollar index heads towards 9900, it will definitely push pressure on other currencies, though they are not a part of dollar index. But as dollar index is tracked globally, it will definitely put pressure on the other currencies as well. So I believe that rupee might depreciate against the dollar once the 75, technically 75 76 levels are breached. We might see a fast and furious rally towards 77, 78, and eventually towards 80 onto the USDINR. But just a conclusion, euro is the one I believe might head towards 1.08, 1.05, which is around 4 to 6%. And if I just look at the dollar index towards 100, 4-5% over there, which might take to the triple digit onto the dollar index. So keep a watch on this. Again, I have done a video on comparison with dollar index and Nifty. In case you have want to check out how they perform, how the Nifty perform against the dollar index, go to our archives and check the video. I have done a detail on comparison of dollar index move with the Nifty. So signing off, Brijesh Bhatia.